All right, ladies and gentlemen, hello. My name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. And today is Wednesday, ladies and gentlemen. Yes, the 8th of October, 2025, and we are looking at some interesting developments on the US dollar side. Look, I'll pick up on that in a bit. Just before we go any further, as always, just a quick mentioning of our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation, and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere, but yeah, we're seeing some interesting movement in DXY, so this is what I wanted to pick up on. Also, just a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. Also, I'm going to be doing a little video, webinar on the 30th of October. Basically, this is part 3 of the series that I have been doing so far, and this is on the top indicators that are used in trading. So the first session we had on MACD, then it was RSI last one. So this one is going to be on the Bollinger band. So the whole point of this session is not only to kind of give you the theory, but also put it in practice. So what I'm going to do is we're going to look at the markets. We're going to apply real life market action on our demo account. So we'll see, we'll place a few trades on our demo, and we'll see if it's actually worth looking at. If this indicator is worth looking at. So, in my opinion, it is, but again, you'll be the judge. So register, then the next, like I said, you'll find the link in the description of this video. Anyway, so ladies and gentlemen, look, first things first, in terms of economic data from the US, we know that we're currently in the government shutdown period. God knows when they will agree on something. Yes, for now, it's basically we're missing some important data sets like the initial and continuous jobless claims, and also the non-farm payrolls from last week, which should have happened but did not happen. This week, something tells me that I doubt that it's going to happen. But anyway, surprises do happen. So we'll see. At the moment, unfortunately, we're just kind of flying in I wouldn't say blind, but with limited data, because something tells me that maybe the NFP could have come out a very, very bad number, and they just didn't want to, force the market to collapse or something like that, because maybe, because of the deals that were happening this week between major tech companies, and maybe the bad job numbers could have kind of shaken the market a little bit. But hey, a lot of conspiracy theories, right? Anyway, ladies and gentlemen, I wanted to pick up on, like I said, on DXY. So far, the indicator, the index is pushing higher here. We're seeing a nice little pop through the downside line, which I have drawn here. By the way, I talked about this previously. Let me just get rid of the Fibonacci for a bit, and I'll bring it back in a moment. But what I talked about previously, I said that, look, we had a good run to the downside, and now we're stalling. We found good support near the 96 point kind of 40-ish zone, from which we rebounded, and we're pushing now to the upside. So in a way, we're kind of forming something of a descending triangle pattern, which theoretically should be a bearish indication. However, look, we moved away from it. We're now flirting with the upper side of it, and in a way, there could be a breakout higher here. If you have watched my videos before, I said it before and I'll say it again that overall I'm kind of bearish on the US dollar, because again we know that the U.S. kind of needs to continue to sell those weapons, and when those weapons are a bit more attractive price-wise to the foreign consumer, then it's quite great. You can sell a little bit more. So the cheaper U.S. dollar, the weaker U.S. dollar kind of helps in that sense. The foreign consumer can can afford more. The foreign buyer can, afford more. Not only, of course, weapons, other exports. What I said this morning in my Markets.com webinar, that there is a little bit of a chance for the DXY, for the dollar index, actually to recover, because look, gold is hitting all-time highs and continues to rally. And I'll pick up briefly on gold in a bit, but gold continues to rally, and some investors might say, you know what, I do like gold, but right now to buy it at those levels, it's way too hyperbolic. Actually, you know what? Let's jump into that chart. It's better to visualize that. So it's way too hyperbolic, and in a way, a bit of a retracement is needed in this one. That said, like I said in this webinar, that there is still a chance, and potentially I'm looking at 4,310. Why? Because because we had the move this year in March when we were, going for that 3,000 mark, right? And we were around here in March, and we killed that 3,000 just easily, and we continued to rally. And everybody was, excuse me, and everybody was kind of hoping, that, oh, maybe 3,000 is going to be that barrier from where it's going to reverse and blah, blah, blah. But what we did, we pushed through the 3,000 easily. Then the next month, we did correct a little bit, but then we just rallied again and just continued to rally. And it was kind of, non-stop until we hit somewhere like around 3,500. So what I'm saying is that, yes, the nice, beautiful 3,000, 4,000, these numbers are quite nice psychological levels. However, are these good ceilings? That's questionable. So what I'm thinking is that, in a way, that's why there is a chance for this one to actually continue pushing further north. Maybe not 4,500, but 4,300. It kind of seems doable. And I'm measuring this from the lowest point of 2015 to the highest point of 2020, and then to the low of the lowest point of 2022. So yes, good, like I said, but again, a good Fibonacci measurement here, however, a little bit subjective probably. So what I'm saying is that if we're seeing, a little bit of pulling back maybe from the retail investors, okay, maybe some big central banks will continue buying gold, and that's okay for them. They have the means, but for majority of retail investors, buying gold maybe at these levels, it could be a little bit tricky. Maybe people will start searching for value somewhere else in other potential or in other safe havens, and potentially DXY could be one of those. So what we're seeing right now is, like I said, a push higher. We're seeing a break of this downside line. So in a way, it's all looking a little bit more bullish in the short run. Because again, I think that, let's not forget that we're getting the central bank interest rate cuts. The Federal Reserve will be cutting rates, so that's already a negative for DXY. But before that, maybe we could see a little bit of retracement in DXY. Also, given that the fact maybe the market is already factoring that in, so maybe the safe haven status of DXY could overcome the fact that there are going to be rate cuts, and that's why, maybe because the market kind of already accepts the fact that we'll have rate cuts, but the fact that maybe the investors will be searching for another safe haven, and like I said, dollar and Japanese yen could be the case, but however, Japanese yen is a little bit of a different story at this point in time. So that's why I'm saying, that's why DXY is the kind of the optimal option right now. Again, theoretically. Also, another little support thing for DXY is the fact that we're going into the holiday season. So we know that, US likes to consume and spend a lot. So, if you're going to raise the DXY a little bit, if you're going to bring back that dollar value, the strength of the dollar, so that the consumer can afford those presents and and all those trips, maybe, for holidays, that could be one of the factors that could support DXY up until maybe December, maybe something like that. But then overall, I'm still not the biggest supporter. of DXY, because again, looking at the monthly chart here, look, we had a great big drop here. We're seeing a little bit of a pause here, maybe a little bit of sideways action. So the 100 level, 101, something like the 101.5 could be nice, good levels, but overall, there could be some weakness coming into the US dollar, especially if we're going to drop below the 96 territory, somewhere around there, in my opinion. And yeah, that could open the gateways towards some lower areas. So, but again, for now, at this point, short term, like I said, what I'm seeing right now, there is a little bit of positivity. So maybe we could see some action to the upside here. Again, I'm not in a rush. I'm not saying that this is, what's going to happen for sure, but hey, look, it's all hypothetical. We're always trying to analyze everything. We're trying to understand, the next big move. And at this point, I can see that there could be a chance for this one to pop higher. But again, let's not rush. Let's see what's going to happen here today, what's going to happen tomorrow, and by the end of this week. Are we going to stay above this downside line? If we will, then great. I will, like I said, consider a move towards that psychological 100 level, or maybe a little bit higher. So, ladies and gentlemen, let me know in the comments what you think, if you agree or not, and yeah, we'll go from there. So thank you very much. As always, stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. And I shall see you in my next little video update. Bye for now.